So if you woke up this weekend, took a look at the global markets, and thought, what in the world is going on? Well, you are definitely not alone. It was a chaotic end of the week that left investors everywhere just scrambling for answers.
So that's what we're going to do. We're going to break down exactly what happened, who's really pulling the strings, and how a new and kind of unexpected player might just be the one to calm this whole storm down. Let's dive in.
All right, here's our game plan. First, we'll look at the spark, President Trump's late-night social media storm. Then we'll dig into China's secret weapon in this whole fight. After that, you'll see how India has suddenly been thrown right into the middle of this thing, forcing it into a really delicate balancing act. And finally, we'll give you a super simple litmus test to figure out what the markets are thinking come Monday morning.
Okay, so it all kicked off with a couple of late-night social media posts that sent absolute shockwaves through the financial world.
First, around 8:30 p.m., a post goes up that basically questions whether a planned meeting with China's President Xi, a meeting just 2 weeks away, is even necessary. Then, in the middle of the night, 2:20 a.m., the real bombshell drops, a threat of massive new tariffs.
And look, we're not talking about a small tweak here. This is a potential 100% tariff on all Chinese goods. That's on top of the tariffs that are already in place, which would bring the total to a staggering 130%. It was a move designed to cause maximum economic pain, and it immediately sparked fears of an all-out trade war. So what's the real story here?
Well, this isn't really just about tariffs. The deeper story is about a strategic resource that China has a near-total monopoly on, something they see as their ultimate ace in the hole. We are talking about rare earth minerals.
So what are these things? Well, they're a group of 17 elements, and despite the name, they aren't all that rare. But they are incredibly difficult to mine and process. And these elements are absolutely critical for pretty much all modern technology. We're talking everything from the motors in electric vehicles to sophisticated military hardware and the phone in your pocket.
This really lays out the fundamental power struggle at play, right? The US has its leverage with critical software and high-end manufacturing like Boeing airplanes. But China, it controls the world's factory floor and, most importantly, holds this near monopoly on the rare earth minerals that the entire global tech industry absolutely depends on.
And China knows the power it has. They've played this card before, successfully threatening to cut off the supply of rare earths to get the US to back down on tariffs. But now, they're upping the ante. There are reports that they're pressuring other countries, like India, to guarantee that any rare earths they supply won't get turned around and sent to the United States. This is a clear strategic play to control the entire high-tech supply chain.
And that pressure on India, well, that brings us to the biggest plot twist in this entire saga. This isn't just a two-way fight between the US and China anymore. A third global power has just been pulled right into the center of the ring.
And don't just take my word for it. The CEO of J.P. Morgan, America's biggest bank, told the BBC that he'd spoken directly with US officials, and their message was crystal clear. They want to bring India closer. He even said they told him they're planning to remove the existing tariffs on India just to make it happen.
So why this sudden charm offensive? It's actually pretty simple. The US economy is driven by tech and software. It needs consumers, and with China looking more and more like an adversary, the US needs a new, reliable partner with a huge, young, and aspirational middle class. And right now, that country is, first and foremost, India.
So as you can imagine, this puts India in an incredibly powerful, but also a really difficult position. It's now facing this high-stakes choice that could very well define its place in the world for decades to come.
Let's break it down. On one side, siding with the US would be a huge boost for the markets. It would get rid of those punishing tariffs and lock in a critical trade relationship. The downside? It risks taking off its longtime partners in the BRICS economic group. Brazil, Russia, China, and South Africa. On the other side, sticking with the BRICS bloc lets India keep its strategic independence. But that path comes with the risk of facing new US trade restrictions and being kind of pushed to the side by Western economies.
And what makes this choice even more complicated is that, behind all the headlines, relations between India and China have actually been getting better lately. They've set up their first-ever direct flights, they've sorted out some long-standing visa issues, and China even removed restrictions on fertilizer exports to India. These are all little signs of a relationship that was slowly getting better, which makes this big offer from the US both more tempting and way more disruptive.
So, with all these pieces moving on the chessboard, how can any of us tell which way the wind is blowing? Well, that brings us to our final section, a simple little litmus test you can use to see what the market is really feeling when the opening bell rings on Monday.
You're just going to focus on these three things. First, the opening. After all the news from Friday, expect it to start in the red. That's just the baseline fear. Second, watch what happens midday. Does the market start to fight back and recover its losses, or does it sink even further? And third, and this is the most important one, the closing price. Where the market ends the day is the most critical signal of all.
Okay, so here's how to read the tea leaves. If the market opens down but then rallies to close strong, that's a signal. It's investors saying they believe the potential of a stronger US-India partnership is bigger than the fear of a US-China trade war. A strong close matters because it's where the big institutional money places its final bets for the day. But if the market closes down near its lows, that means fear is winning, and investors just aren't buying that a new alliance can fix this mess.
And that really leaves us with the ultimate question, doesn't it? As the world's two biggest economies draw their battle lines, is India just caught in the crossfire, or is this chaotic moment actually its single greatest opportunity to reshape the global order and write its own future? That right there is what the entire world will be watching.